pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
The roll call, we have 3 commissioners here tonight. Can we have a motion to approve the agenda?
So moved. Second.
All those in favor say aye.
Aye. Aye.
Aye. Okay, we'll start off with public comment. We have a couple people that came to talk to us tonight. John is first. Oh,
We're
you're
gonna
coming up
speak together.
Okay, go ahead. Go ahead.
President Silva, members of the board, thank you for hearing us tonight. My name is John Slight. I'm the chapter vice president, and I've been with the district nearly 14 years. In my current position as senior waterworks mechanic, I coordinate the daily activities of the system operations crew. I'm married to a very supportive wife, and I've dedicated a large portion of my time to raising my 2 young children. I take great pride and ownership in ensuring that the public receives reliable, safe drinking water from the distribution system.
My name is Tracy Triplett, and I have been the water quality laboratory analyst for Clackamas River Water for nearly 4 years, and I look forward to many more. My husband and I have a 1-year-old daughter and are excitedly expecting twins early next year. And although my family keeps me busy, I thought it was important to serve on the bargaining team to ensure that we maintain the level of wages and benefits that my family depends on. We first took the opportunity to speak to this board at your August meeting, and we communicated to you that if the contract had not settled, we would return to share our perspective. Our benefit package remains the only unsettled piece of our contract. Our proposal only asks that our membership does not go backwards. Under our proposal, our wages will only be adjusted to keep up with the cost of living as measured by the local consumer price index. On the other hand, the district's proposal puts our members in a position to earn less during this new contract than we did previously. Under the district's proposal, our members would pay more for their health insurance and would receive a cost of living adjustment that is lower than the actual cost of living. Over a 3-year period, it is likely our earnings would be worth at least 5% less than at the beginning of our contract. Not only will our wages not keep up with the rising cost of inflation, but we're being asked to pay significantly more for a health benefit plan that is far inferior to what we had previously. A committee comprised of management and union members was created to look at healthcare options. The committee recommended that we move to this cheaper plan that has a higher deductible and a much higher out-of-pocket maximum, but that the savings be used to increase the amount contributed to the employee's HRA Viva Health Fund to offset the higher out-of-pocket costs. However, we've been presented with an offer that has no adjustment to our HRA Viva and an increase in the percentage of our premium that our members pay. We would be paying more for a worse plan that pays for less of our healthcare costs. When you combine this with wages not keeping up with inflation, it's a very tough sell to our members.
Why has the district taken this position? We are left to wonder because after analyzing the financials, it would be untruthful to say that the district is struggling. Employees have also worked recently to save the district money on benefits and wages by taking additional duties for Sunrise Water Authority, on top of all of their responsibilities here at CRW. This process began in early April. We are now into our 7th month. Our membership is growing impatient with the progress. Tonight we convene a meeting of our membership to discuss the next steps in the collective bargaining process. At the meeting, we all discussed that we are committed to finding a settlement during our mediation. However, we also discussed that we did not feel that our concerns were being understood or respected. So this evening, we took a strike authorization vote. Every member in attendance, more than 80% of our membership, voted yes. The bargaining team has now been authorized by the membership to call a strike. To be clear, nobody in our team wants to call a strike. It is the absolute last option for us. But we also want to be heard and taken seriously. It is not fair to ask our membership to go backwards over the next few years. Board members, please make an effort to ensure that a fair contract is done with our membership. Thank you for your time.
Any questions or comments?
I'm good.
Thank you for coming this time. Under action items, item number 1.
Before you start on action items, the board secretary have to report out from our executive session that occurred on October 16th at 6:52 p.m. 4 commissioners were President Soa and Commissioners Kalani, McNeil, and Humberston, General Manager, and our attorney, Dean Phillips. 4 items were discussed at the meeting. They were all lawsuit issues, and they were basically bringing us up to speed as to the status of those lawsuits. One is the federal civil rights lawsuit filed by a former board member of this board. The second one was the Mitchell election contest and the issue of compensation for legal fees. The third was the Court of Appeals injunction reducing attorney's fees and the appeal on that. And the last was the Oregon City right-of-way fee and whether or not we were to participate in an amicus brief. And that was the subject of the briefing from our attorney. Thank you, Mr. Chairman.
Thank you. Julie?
Okay. So I'm very excited and pleased to say that we've issued our audit opinion well over a month ahead of where we've ever been able to do it since we became your auditors at CRW. So I'm here to talk to you a little bit about that audit opinion. In front of you, you should have 3 documents. The first one, there's 2 two-page ones, which those are our 2 different audit opinions. There's one audit opinion that talks about the financial statements, a second talks about the Oregon statutes. And again, I'll go through those in a little bit more detail. And then our third one, the longer letter that was addressed to you, is the letter to those charged with governance, which is the results. I'm going to go over the majority of that in this session. But if you want some nice bedtime reading material, it could very well put you to sleep. So again, talking to the audit reports, again, we have 2 separate opinions. We're excited to state that we have once again given CRW a modified opinion, which in our speak is a clean opinion. That's what you want to have. This year's audit went very, very well. We received everything that we wanted or needed well ahead of schedule. When we came in here, all we were doing was a lot of auditing. Carol and Lee make it very apparent that the audit is very important to them and to their teams. So everybody is here willing and ready to talk to us and gets us in the door and then gets us out of the door, which I think is important. There really, as far as the financial statements are concerned, was not anything significant this year. There was no significant change in operations, no form of financial reporting piece. There was no change in audit standards, significant change in audit standards. There was one standard that was implemented this year, but it only had a very minimal effect on the financial statements. So I think that's very good. We kind of got a breather year where there wasn't a significant standard going on. Then we have to look over about 13 different compliance requirements in what's called the Oregon Minimum Standards. These are actually set into law and we're required to look at. So that's your second audit opinion. That looks over our major areas. We look over is procurement and contracting and budgeting. We look over a couple of other areas as well, but those are the 2 that we spend the majority of our time with. And we're excited to note that we did not find any issues with your procurement process, nor with your budgeting process. So everything came back clean on that as well. Now, if you remember in past years, or if you've been seeing some of the past years, we have definitely found issues. Whenever an issue comes up in the past, we always make sure that it's been cleared up, and we found nothing that we needed to report to you again, because everything had been cleaned up to our satisfaction for the audit process. So very good. Those reports are currently in the printing stage. They're introducing our opinions into the financial documents, and then will be available on websites and everywhere else and sent to the state. Ready for everybody. So a couple things to understand about the audit process is our responsibility under generally accepted auditing standards. You own the financials, you by CRW owns the financials, we just place an opinion. So we come in and do a whole host of testing, from looking at internal controls to analytical procedures to testing details, which is actually looking at source documents. And we do all that to gain an opinion on whether we think the financials are stated fairly, or fairly in all material respects, which we do. We were able to finish the audit right along with the planned scope and timing. I think our planned timing was actually for December, but we were doing this, we were hoping for the November meeting, because we didn't want to get into inclement weather, and then today happened. Exactly.
You got there anyway.
I know, right? I was in Seattle this morning. I wasn't sure I was going to get home, and then there was nothing on the roads. Yeah. So we were able to finish it well ahead of schedule. In note 2 is your significant accounting policies. Again, if I were ever to teach a class on reading financials, I'm sure everybody here would want to be there. But if I were to teach that class, you would start with the note 2 rather than the actual numbers, because it teaches you or tells you about what the rules to the financial statements are. We need to let you know if any of those rules changed this year considerably, because that could change how the numbers are derived. There was no new accounting policies or changes to existing policies that were significant to financial statements in the current year. We also need to let you know that there are some accounting estimates. There's some numbers in there that aren't, I guess, hard and true. Things like unbilled revenue and estimates done from when a customer's bill is last time it's read to the end of the year. That has to be estimated because they don't read every single meter as of the end of the year. The allowance for doubtful accounts, unfortunately, there is going to be a piece of your accounts receivable that's not going to be collected, and we have to estimate for what that is based on historical amounts and current trends. And then we don't know how long the plant will live. We don't know if it'll estimate 30 years, 40 years, or how long it will go. So all these are typical estimates within the industry, and all of them are are conservative and well thought through as far as the management estimation techniques used. We had no significant entries, and the reason I put significant, we did have 2 real minor entries, which just the new implementation is 65 of a new GASB standard, which was I think 27,000 and 18,000 or something like that. It was just, we shuffled it a little bit, but again, real insignificant.
Explain what that is.
Yeah, so GASB 65 made us look at how bond issuance costs were put on the finance. They won't allow you anymore to keep them on the balance sheet and amortize them over the life of the debt. You have to write them off right away. So there was a real minimal amount that needed to be written off, and in that, some other costs got written off that actually could stay on. So we just put them back on. Yeah. It was, they're just, and they're tiny. You could have written them off and fine. Yeah. Unanticipated audit adjustments, what these are is what we call past adjustments, and past adjustments are things that we find during the course of the audit, but we can live with because they're not material to the financial statements, and it becomes management's determination on what they want to do with them. We didn't find any of those this year, and I will say the 2 audit adjustments that we found, we could have easily put them in that bucket. We could have easily not had them reinstate those back to the financials, but management chose just to get it.
I could have said no thanks, but we decided to go ahead and get it set up absolutely correctly.
Good.
Yeah. We had no disagreements with management. I will say, what this gets to is the handcuffing that sometimes auditors go through, where either we're not getting the information we need or management's stonewalling us. We have healthy conversations with management. We also don't want clients that just take our word as absolute gospel. We want to have a client that comes to us with, if any issue, comes to us with what their resolution is. We're able to have good conversations, and we feel like we're having those conversations with management, which I think is exactly what you as a board would want to hear. Consultations with other accountants gets to opinion shopping. We don't know of any opinion shopping, and we didn't have any difficulties encountered performing the audit. Again, everybody was here on site when we were on site, and would talk to us right away. If we had questions, we had answers right away because people were jumping on and making the audit a priority, which we very much appreciate. This is a big one because in the past several years, we've had a smattering of material weaknesses and significant control deficiencies. And again, we've gone through and ensured that those have been cleared up. And even in, I think it was last year, that we had some issues about covering procurement. And we didn't find any material weaknesses in your internal controls or significant deficiencies in your internal controls. They're very good. Every time we bring something up with management, by the next time we come out here, it's resolved. And there's conversations through the way. So if anybody has any questions about how it's being resolved, they're very good about bringing us in so that we can provide our thoughts to the process as well. There is still one matter, and this was in last year's SAS letter at all. This takes a while to update, but the overhead rates have not been updated in just a few years, of quite a while. And we've done we did enough testing to determine that they're materially correct. We're okay with the final numbers that are coming out, but we have been recommending an overhead rate study. We know that the district is currently in the process of that overhead rate study, and we'll be implementing it by next year. That's coming out. So wanted to keep that on the list because it hasn't come off the list yet, but we do want to recognize the effort that is being put into that right now. And again, everything that we found in prior years, minus the overhead rates update, has been resolved to our satisfaction. So that ends what happened with this year's audit. I was going to ask you if you have any questions on that, and then I wanted to talk about one additional exciting event that's happening the next year. Any questions on the audit?
Can only imagine.
I got a couple questions. First, do you feel that your auditing procedures are thorough enough that if there was any fraud or misappropriation of funds that you would catch it?
So that's a great, I feel that our auditing procedures are, and we actually direct procedures directly towards the area of fraud, of where fraud could occur. If it was material fraud, absolutely, our audit procedures would catch it. We do even go down a lot further in when we're doing our fraud procedures. And for example, this year we did a couple, or we centered our procedures around payroll this year, about who has access to it, what could be going on. Ghost employees is our favorite one of this year. So I can't tell you for certain that if it's not material, that we would find it. I think our audit, we really watch where the cash comes in and where the cash goes out for the organization. So, I think that we would catch it if I know we would catch it if it was material. So.
You have one.
Yeah, I'm kind of along the line of what you're talking about. You would catch something that's material.
Right.
Which implies there's something that's less than material but still not necessarily correct. Can you give me an example of what is material and what is less than material?
Yeah.
Just in simple non-accountant language?
Oh, Lord. You got me on that one. So
we asked the engineers to talk to us in non-engineer language too.
Essentially what material means is anything that would make you as a user of the financial statements react differently to them, right? So that's what the concept, that's the overlying concept of materiality. And we do look at all different types of users, from the board members to bondholders to outside parties. So we have two determinants on materiality. One is quantitative, so an actual number. So we come up with a number that says, we don't believe that if your financial statement is changed by X amount, that anybody would rely on them any differently out there. But secondary, we look at qualitative factors. And those are factors like public perception, which is why we drive our fraud procedures a lot lower scope than we do with maybe some other things that are purely financial statement driven.
That's
no, too much.
Give me an example of a material weakness or failure.
A material weakness?
Yeah. Something you would record as materially a problem for us.
Okay, so let's say that your power, you have power, your water purchases. Let's say you didn't record one of your water purchase bills. That would be a material, most likely a material item.
And that would come up.
That would come up.
Okay. Just give me an example of one that would not be considered material, but you might not find.
If somebody skimmed $20 off the cash in a certain day.
Okay.
Right.
Thank you.
Yeah.
Now I understand.
Yeah. Exactly. Hopefully we find it, but again, our procedures are designed for the overall financial statements, not every,
Okay.
you pay us to do every single transaction. So did that help?
Yes, definitely.
You want to proceed with your?
Yeah, did you have another question?
No.
Okay. So I just wanted to update you with what is going to occur on next year's audit, because most likely you're going to be hearing about it if anybody's talking about financial reporting. There is a significant audit standard that's coming out and will be implemented to CRW next year. And this is the pension project that they've been working on forever. Currently, are you excited for it? Actually, I've got really good news too. Currently, you have a pretty significant unrecorded liability out there. So you've got a lot of past employees that have worked that you owe in pension dollars to that you haven't paid for yet. Everybody in the state or the United States under almost every PERS plan is in exactly the same position. The GASB decided that as of next year, you will start recording your portion of that liability. We have not seen any preliminary figures come out of Oregon to see what that dollar amount is, but it will require a restatement of your financials. So we'll essentially reset all your prior years for what the impact of this is going to be. The good news, by the time we even start planning this audit next year, we will have all of the information from the state and be able to give you a very good estimate. And Carol will have all that information, give you an estimate of what that underlying dollar amount is going to be. But it's most likely going to be in the millions. So it will be an obligation sitting on your books. And it will reset every year as they do an actuarial report. There were some pretty significant concerns about the state and what level of auditing they were going to do, whether they were going to audit all the way down to the employer level, and the state has taken that obligation on. So we're excited to report that Carol will essentially, and we will essentially get a packet of information that you'll be able just to record straight off. We won't have to do any additional auditing over those amounts because the auditor of the state PERS plan is taking care of all that.
So if I could add a little bit, currently we have a note about pension plans, and it says we are participants in PERS, and this year we paid PERS $420,872. And that is 100% of what PERS said we needed to pay them based on that percentage that we calculate on our employees' wages. What's going to happen next year is PERS is actually going to do a report that says you have this many employees, you have had this many employees in the past, and they are going to calculate through an actuarial method the dollar amount that we are obligated to pay. And instead of being a note in the financial statements, it's going to be a number in the statement as a liability.
Okay.
So it is going to significantly change what our financial statements look like. It doesn't really change how we do business or, cash flow or anything else. But it is going to make us look not in quite as good a financial shape as people are used to seeing us. And as Julie said, we have to restate back to last year as well so that we're comparing 2 years that are reported the same.
So how do you use that number when you have the legislature changing what those liabilities are and the Supreme Court that still has not decided on whether those changes are constitutional or not? I mean, this thing can be all over the board.
That's one of the problems. Well, and really what it measures is what past performance has been. And so what really, the things that really could affect it is if there's decisions made on what employees are going to get out of it, like when they keep dropping the levels of what the multipliers are, and secondary, what the investment earnings are going to do. So they reset as of what they know at the end of each year.
So they do that annually?
They do it every single year.
Okay.
Yeah. The fear is that a lot of those decisions, I mean, once, you know, the legislator might make decision A, then go to B, and then go back to A, and it could increase the volatility of the financial statements and what gets put to the income
Well,
statement.
depending on how the courts
Or
rule.
will,
Yeah,
yeah.
it will change those.
Right.
And I guess my point is that it is what it is.
Right.
But to look at it year to year, it's really hard for you to get a sense of what your liabilities are because the rules keep changing. And so for elected officials trying to make some sense out of what their liability is going to be tough, especially going forward if we don't know kind of what returns on investment are going to be for those funds.
There is so this, at the end of the day, this is a one huge estimate. You don't know how long people are gonna live. You don't know what the investments are
What
gonna
the
do.
actuarial is,
You
yeah.
have no idea what the state legislator is going to, I mean, what decisions may be made in the future. So all we can do, or all those actuaries can do, is make the estimate based on the best amount of information they have in front of us at the day. And I will say the liability will always be 1 year in arrears. Because it takes so much time to get this type of work done and audited and all the way down to the employer level. As of 12/31/2015, your actual liability will be measured as of 12/31/2014.
Sure.
So for the time period. So you're right. I mean, at the end of the day, it's
And
one
year over
huge
year,
estimate.
everything is,
Yeah, it could be. There is some smoothing functions and some different things, but I guess the long and the short of it is they thought having a standard to get these on the books so at least people see the obligation that's really right there in front of them that everybody has is more important than what could be the fluctuations from year to year.
Have we ever not paid the full PERS bill that they sent us?
There, several years ago, we were behind in making the last payment, and that was when PERS was going through a system changeover. And so we did get to the end of the year owing PERS money, but we did record that liability.
Did
So
we pay? Did we
paid-
ultimately pay it?
Yes, we paid the amount that they suggest, and the problem is, based on the amount that needs to be paid out for all of the employees, there is an unfunded part. So a portion of what we need to pay out is fully funded, there's a portion that's unfunded.
I think that's a great point. You start the liability as its total amount minus what assets are sitting in trust. So it's really just the unfunded that comes to your books. Sorry if I didn't put that right.
How did-
since the change of
I'm just trying to understand how the unfunded comes about. Did the unfunded come about because the actuarials were, they were too low in their estimates of what it would needed to be paid out, and they're having to increase that amount?
There's no rules currently as far as these, well, there might be some state statutes. There's no federal rules or accounting rules that guide funding levels. So these funding levels are a lot of times are set by what's going on within the state. So essentially, if you have an unfunded balance, it's because the state's funding level has not been sufficient to keep up with what the current obligation is.
Not necessarily because we did anything wrong.
You have nothing to do with it. You can
And we
only
can't
pay.
control
You have no control.
Yeah.
I'm just thinking of, okay, I'm
No.
gonna see a change in that balance sheet, and
No.
if one of my constituents wants to look at the budget, and they see that, I'm trying to think, how do I explain this to someone in layman's terms?
Yeah,
We paid what we were told to pay.
yes.
But the actuarials have changed what they believe is going to be owed. Therefore, because of that change in the actuarial estimates, we have an unfunded liability. And that has to be recorded.
And/or market fluctuations.
Yeah, right. See, there's
It's all
two parts.
invested,
There-
yeah.
There's the actuarial piece, and there's also the piece with return on investment. And that's not been accurately
Forecast.
calculated. Yes, forecasted.
Okay.
And so we end up in these problems. And so going back to the constituents, right?
Yeah.
Somebody
You
goes
gotta
and
put it
looks
in
at,
simple terms.
looks at what you publish, we look at this thing, we have this number, right? And they go,
You didn't pay your
good, look at that number, you know?
Mhm.
And you better tell them it could get a whole lot worse than that. Or it could get a whole lot better than that.
Depending on what they find.
Exactly. So year over year, that number changes quite a bit.
Yeah.
Right.
And so for the lay person, you know, anybody that would ask us about your audit and see this number, your budget, you know, we'd be going, I don't know, you go down and talk to the PERS board and the Secretary of State and find out exactly what they're doing about that.
Right.
And the good news is this happens to every government.
It does.
Yeah, so it's, you know, it's us, it's Sunrise, it's Tualatin Valley Water District, it's City of Portland,
Well,
everybody that's a PERS participant.
What I was concerned with was more of the New Jersey problem, where they actually didn't pay into the public employee system for the better part of 10 years what they were actually obligated to pay. And that's how they ended up with an extremely big unfunded liability.
Yes. Yeah, yeah, not at all.
And I wanted to be sure we didn't do anything like that.
The other thing too is that these new standards really tightened the controls of the actuaries, and so like entry age into the plans, there used to be 8 different ones they could, and again, actuaries are a whole different animal as far as what they do. There used to be 8 different types that you could have there. They whittled it down to 1. They really hammered the discount rate to start bringing that discount rate closer. And just to give you an example, my for-profit entities that have these same type of plans that already have to report them on their financial statements, their discount rates right now are sitting somewhere between 4 and 4.5%. Most first plans in the in the United States are sitting somewhere between 7 to 8.5%. So it's over double. And that discount rate, for 1 percentage point drop in the discount rate, it increases the total obligation considerably. So you're right. As far as CRW is concerned, you have absolutely that you've been paying what they've been telling you to pay. You have there's nothing that you can do on this. This is a decision that's made by the funding piece is a decision that's made by the first board. The only financial implications I could potentially see of this standard when it's implemented is twofold. One, a real indirect effect to if we find out that Oregon PERS, which I doubt this, but is horribly underfunded, that could drive decision-making of the funding amount in the future. Secondary to that, you know, we have been getting out into the bond markets considerably. And again, every government is facing this that's involved in a PERS plan, which is about 75% of all the governments out there. So they know this standard's coming down the pipe. And where you could see it impacting bond ratings is in those states that are horribly unfunded or underfunded. So we'll see how that plays out in the next 5 years.
One last quick question. When that change occurs to our balance sheet, and if we were to go out and look for bonding for some projects, how will that impact that?
The hope is that it won't, because, well, I can't say that. It is something that is a known event that the bonding agencies understand and look at. It really depends on what those unfunded levels come out at. I mean, if the plan comes out at 25% funded, you could, which is not a problem. Well, which some states are looking, that's going down the pipe, and so New Jersey for sure, which may be less than that, but you could see some decision making. They could start dropping ratings in certain states if they're, and what they're trying to do is drive behavior. I mean, in the plans that are under a certain amount, and I don't know what their threshold is going to be, you could see the bond rating agencies try to start dropping their credit ratings just to get states to start really focusing and getting the funding levels what they think is to an appropriate or a healthy level. So again, I think we'll have to see what Oregon comes out with. In the past, you know, the communications we've gotten so far have been Oregon is in a pretty safe place. But again, we have not seen the actual numbers come out, so till we do, it's hard to anticipate what that impact could be.
Thank you.
Just a quick question. What will happen with those districts in the state of Oregon that borrowed to leverage their PERS?
Yeah, so they're, it's a long.
Thank you. I wanted to know the answer to that too.
So, and I know that this
And
is
did we?
No.
We didn't factor them. Good, okay.
So, and again, I don't know where, again, we haven't seen anything come out, so I don't know. It's gonna depend. So these have become some crazy issues because these side funds, there's actually 2 different types of side funds. There's a legally restricted side fund that actually legally says it's in the name of, like if you did it in the name of CRW, those will generally reduce the obligation, the individual obligation. Unfortunately, nobody knew the standard was coming down the pipe when a lot of these side funds across the United States were built. So a lot of them weren't legally segregated. And essentially, there's a potential that they'll just go and reduce the overall obligation, not the individual employer's obligation. So I to be honest with you, I'm not sure where, because Oregon has fallen in that. site, but we will see shortly.
Because it was primarily school districts, as I recall. that
Well-
And there were some special fire districts who did that.
The city of Portland did, didn't they?
Yeah, they did.
Yeah,
They
they
did.
put in a huge chunk of money for Oregon.
Okay.
So that's a great question. So there's one of two ways. Either it's gonna go directly against their specific obligation, or if it's not segregated enough in the eyes of what the standard is, it'll just reduce everybody else's too, which is a little, yeah.
So is Oregon still about 80% funded?
That was the last,
I mean, last time I looked, it was
Yeah.
right around 80%.
and again, we haven't seen the new actuarial reports come out,
Right.
so some changes could be made.
And we'll know what our earnings are here in a month and a half. Yeah, 2 months.
And the good news, I mean, well, I've got to say, I am so glad the standard didn't come out 2 years ago, because 2 years ago, I mean, those discount rates would have been hit. I mean, at least we're not seeing the impact of that, because that would have been really brutal. So I personally think this is, it's been a lot of work, getting it through. And I think it's a good standard at the end of the day, so we know everybody is able to measure it, put it on, understand where all the states are at. Hopefully the idea of the whole New Jersey thing would have been caught well ahead of time if this standard had been implemented.
Well, I think it was remiss a long time ago for not having this stated
Agreed.
the way this is, because I don't believe that we would be in the problem that we're in had that been the case,
Agreed.
you know.
I
It's-
personally agree, yeah.
I mean, I was shocked when I first started watching this stuff and going, they do what?
Right.
I thought it was just irresponsible, so.
Yeah. So that's what, I'd like to thank real quick, management, Lee and Carol and Carol's team, for putting up with us for the week that they did, and for getting us everything we need. So thanks for having us tonight, or me tonight. I guess there's no us right now. Multiple personalities.
Any more questions?
No, sir.
Thank you.
Thank you.
Thanks, Joe.
Thank you.
Action item number 2, resolution,
Point of order, Mr. Chairman. We need a motion on item number 1.
yes, please.
I move to acknowledge receipt of the fiscal year 2014 comprehensive annual financial report ending June 30th, 2014.
Second?
Any more discussion? Clerk, call the roll and have a voice vote.
Commissioner Humberson,
Aye.
Commissioner McNeil,
Aye.
Commissioner Solar.
Aye.
Motion passes 3-0.
Item number 2.
Thanks, Carol.
You want me to put a motion on the floor? Mr. Chairman, I move to approve resolution 05-2015, amending sections 13.1 and 13.2 of the IGA with Sunrise Water Authority. We need a second.
Second.
I just have a question. How come this is, resolution is numbered for next year?
We start resolutions July 1st for the fiscal year.
It's fiscal year 2015.
Correct.
Yeah.
Any discussion on this item? We'll have a voice vote again, roll call vote, I mean. Clerk, call the roll. All those in favor say aye, those opposed say no.
Commissioner Humberson,
Aye.
Commissioner McNeil,
Aye.
Commissioner Solar.
Aye.
Motion passes 3-0.
I'd like to take a moment to talk to the man himself. In light of the union vote, it was interesting. Your stuff.
Yeah. No, I didn't understand how that was. 7, 8. Yes. How that money was not paid.
Okay, we'll proceed with the consent agenda.
I move to approve the consent agenda as presented.
Second?
All those in favor say aye.
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 Those opposed say no. Informational reports. budget, biennial budget. Carol.
Good evening. This is a follow-up discussion from the work session on the 27th, talking about the possibility of biennial budgeting. First of all, I've got kind of a list of benefits to the biennial budgeting, and I recognize that these are primarily benefits internally to staff. It does enable us to streamline the process. It makes available approximately 1,400 hours of staff time, and that's across throughout the district, but it does take a significant amount of time to put together a biennial budget, or a budget, and we do that every year. We can also, a biennial budget would provide savings, primarily related to opportunity cost. If we're not spending that 1,400 hours doing budget work on those off years, what can we be doing at that time? And it would also, we would gain some efficiencies by looking longer terms. And we have hard cost savings identified of just over $3,000. And that's the cost of printing the budget and doing the public notices in the newspaper, putting together the packets for the budget committee, that kind of thing.
So the 1,400 hours of opportunity cost, is that, I mean, does your staff track time card? I mean, do you have a code for coding when you're doing budget?
We haven't.
How do you get to that number?
We haven't actually done that. We went back through the calendar and looked at the meetings that were scheduled. So we have like a kickoff meeting with the management team. So we counted like a couple of hours for every manager.
Sure.
And then we also had individual meetings with each manager to talk about their budget as we start putting the budget together. Then we have a follow-up meeting with the whole management team where we kind of say, this is where we landed. Typically, I'll have a meeting with Mr. Moore so we can kind of say, what do we need to make, where do we need to make changes? So we counted up all of the meeting time. We also counted up my actual staff time,
Your staff time, right.
consolidating and
Okay.
putting the budget numbers all together.
Do you have a guesstimate of the value of that 1,400 hours?
By my calculation, and this is using everybody's actual loaded labor rate, it's about $68,000.
Okay, thank you. And that's an approximation.
Yes. This also would enable us to make sure that we have resources available for integration activities as part of the Clackamas Regional Water Supply Commission, which is one of the goals of the commission, is to have make resources available to kind of go across the line and help at Sunrise and the other way around. It also would enable, there would be significant likelihood of a bond rating increase for the district. The rating agencies love long-term thinking, and a biennial budget is evidence of that. So I listened to the board at the work session, and I know there were concerns about the public process. Is there sufficient time, opportunity, availability for the public to come in if we're only looking at this every 2 years and budgeting for 2 years and prioritizing projects for 2 years? And also some concerns that this could limit the district's ability to kind of turn on a dime. You're more than 24 months ahead of time. You're looking, 28 months ahead, maybe 30 months ahead, trying to decide what's going to happen over the next 2 years. So we have things in our environment that could impact that. Certain projects that are basically, required of us by other agencies. We could have annexations in the district. There could be development projects. So there are things that could happen to us in that 2-year period that we didn't anticipate.
Aren't those all items, though, that can be brought before the board as changes to the budget?
They
under
absolutely
certain
are.
very specific circumstances?
Yes, they absolutely are.
And you can do a supplemental.
Right.
Essentially what I'm talking
Yeah.
about. Okay.
So to address the public input and access to information, the website is greatly improved over what we had 2 or 3 years ago. And there's a lot of information, and it's real-time data that citizens can access by looking at our website. I think our bigger issue at this point is making sure that the public knows that there is a website there with a lot of good information. On that website, we have our current and our previous budget documents, so they can kind of look from, budget cycle to budget cycle and see what we have done in the past. Our comprehensive annual financial reports, our CAFRs, are also on the website multiple years. As we prepare the budget, the proposed budget, we put that on the website as well, giving the public an opportunity to review it prior to the budget committee meetings where the budget is approved and or the budget hearing where it's adopted. And we've seen with the information available on the website that the public records requests have really dropped. They're minimal because people are able to find information that they need. And so I think that's also maybe evidence that people are also comfortable with actions that the board's taking. With regard to responding to changes, and I think we've already pretty much talked about this, we appropriate at fairly high levels. So minor changes can be adjusted just by saying, we were going to buy one of these, but we really have to buy one of these now, so we're going to forego this. We'll wait until a later time, and we'll go ahead and get this because we have a need. So we can make those adjustments kind of on the fly, those kind of minor adjustments within the budget appropriations. As long as we don't exceed the budget appropriation, we're okay, and we're spending money to do the work of the district. And then anything that's unanticipated, some activity that happens, we can do a transfer just by resolution at a regular board meeting. If we need to do a supplemental budget, we advertise for a budget hearing, and the board can convene a budget hearing to make any adjustments that need to be made. So I've got some additional detail and information. I don't know if anybody wants to hear more. This is a good time maybe for discussion or questions.
I guess I only have one thing. Have you informed our standing budget committee about any of this? Do they know that we're talking about this?
No, I have not contacted the budget committee because I felt this was really a board decision, and once the board has determined what they would like to do, then that would be the time to contact them. I have looked at the terms of the existing committee members, and I believe we have 2 openings this year. Should we move to a biennial budget, we would bring those 2 people in for 4-year terms, but the other ones can actually stay where they are, and then the new members that replace them in the future would go to the 4-year terms.
I just think they need to know. I don't want them to feel waylaid that we change the whole process in the middle of their term, and I don't want them to feel like they didn't have any input. And so I would like to see them get this information and give them however long the board thinks is appropriate for them to respond back to us, or back to you personally. And then we'd like to hear what they had to say.
And I did talk to some other finance directors that have moved from an annual to a biennial budget to see what kind of response they got, either from their elected officials, their budget committee, or the public. And for all of them, they said there really wasn't any major concern.
Yeah.
I considered calling all the budget committee members and saying, what would you think of a biennial budget? And I didn't do that, and again, because I kind of felt that it was, at the board level first. But I could certainly contact all the budget committee members.
Let them know that we're considering the idea, and what do they think about it, and give you the input which you'll share with us. I heard, I believe it was from the chair, that it was done at the state level and there were some problems with it. But it sounds from what you're saying about the smaller agencies that you've talked to, that it's worked fairly well for smaller agencies. Do you think there's a real difference there because of the size of organizations that makes it work better, or not?
I think certainly for a special district like ours, a singularly focused district where we do one thing, and I've got some information up here. 97% of our revenue is rate money. About 87% of our materials and service budget is either internally or externally mandated. things like our utilities that are 18% of the materials and service budget, we have to pay the electric bill. If we don't have electricity, we can't produce water. You know, so when we look at when we look at those kinds of things, really our discretionary budget piece is relatively small. And we also have board-approved reserve policies that have to be met, and so that has to be included in the budget preparation as well. So I think, again, because we are smaller, singularly focused, we're not a component of another entity or agency. It's, you know, what we do. If we don't spend the money in the budget, it stays in the general fund. It doesn't go anywhere. We don't have to give it back to anybody. I think that helps as far as say, ooh, it's, you know, May 31st, I still have $100,000. I got to spend it before June 30th. We don't really have that motivation, that, you know, use it or lose it kind of motivation, because it will be available for the next budget cycle. If we don't spend it, it goes into the ending fund balance and can be reappropriated the next cycle.
I don't have any more questions.
I'm good.
Okay. I
Thank you,
will
Carol.
be
Oh,
happy
you
if the board would like me to, I'd be happy to contact budget committee members and just get a sense of
That's
their
where I'm at.
thoughts.
I just think we need to communicate with our other half that helps us with the budget about what's going on and not have them go, nice, but, you know, but nice to know that you were doing this, you know.
And frankly, when I look at the existing public participation, in the last 10 years, 10 budget hearings, right, we have had 6 public comments. And of those, 3 of them were budget committee members that came to the budget hearing
Right.
and said either, you know, please adopt the budget that we approved, or, you know, thank you for the process, you know, thank you for the ability to participate. So, you know, that's our active public, basically, is our budget committee
Well,
members.
I guess that's my point, is,
Yeah.
And they're the most
you know,
interested.
if they're interested in being on the budget committee, we probably should include them in changes in the budget process, so.
Can you share with them the approximate potential savings also?
Yes.
So
Yeah, I think they should see your,
they should see your numbers.
yeah, you need to see your numbers.
So I guess what we're really looking for is that the direction of the board. I mean, so
Larry? That would be your box.
Let me say, I was in the Oregon legislature when they had a biennial budget. It seemed like it worked fine. And somebody came up with the idea that we needed annual sessions instead of biennial sessions. And here's what happened. You have a legislative physical office in the main floor of the Capitol building. They would hire analysts or requisition them from other agencies in order to get through the biennial budget process. And at the end of the session, they pretty much shut down and only kept enough staff to run the emergency board. And what has happened is, they use that as one of the arguments for having the voters to approve annual sessions is we have to look at the budget every year. So what they do now is pretty much have a staff full-time that gets ready for the short session, which is the end of the every other year.
Even number year.
In order to be able to cram all that information that they gather in the long session into that session so they can amend the budget or change the budget or whatever they do. And so, even though it's perceived to save money, in fact it hasn't.
Good to know.
And that's my opinion.
So how does that, so what is, so what the state does is still quite different than what we do, because from what I'm reading from Carol, is we would have less of that convening of people and stuff to do a budget every year, where we would only be doing it every 2 years. Hence her savings. I mean, I'm only interested in doing this if it's gonna save us some money. Otherwise,
Yeah, that's-
leave the process the way it is.
That's not the experience that they've figured out in Salem, is that.
You know where I am with
Carol
Salem.
projected that you have less staff hours, but in fact, they have to have more staff hours to get ready for that annual budget.
It sounds to me like they used the biennial budgeting process to take the short section and jam everything in that short session so that there would not be as much time to digest the budget and to play games
That's why
with it.
they don't have all the hearings that they have in the biennial time, but they
And the odd number.
still have the same number of analysts. And you know, to prove this, all you gotta do is go down and look at the legislative physical office compared to what it was when I was there.
Mhm.
It's almost twice as big as it was then. They've moved all the other offices out and filled them all with legislative analysts.
So do I hear you saying that you think a biennial budget a true biennial budget is the right way to go?
No.
Okay. Then I'm confused.
Well, that's the way it used to be, but
Yeah.
now they actually have annual budgets.
Right. But you say that the annual budgets are costing us more than when it was a biennial budget. I'm just confused.
I think what you're saying is it's a biennial budget in name only. They're actually,
What?
it's a biennial budget in name only at the state
Yeah.
level. They're actually doing annual budgets, they just print a document once a year and then have supplements. And the supplements is as big as the original budget.
Which, like, again, it sounds like they were playing games with it for political reasons rather than actually doing it for the reason it ought to be done, which is if it's more efficient and saves money, then that's the reason to do it. And if it doesn't do that, then you shouldn't do it, essentially.
Yeah, I'm
In the
I'm
simplest
looking
of
for some
terms.
way to,
Can I,
yeah.
the primary concern that I have is that one of the things that we've been trying to do operationally with the 190 and some of these other things is to figure out ways to save money. And I think that our accounting group is kind of the first example of where when Sunrise loses their finance director, our CFO is gonna take on responsibilities for Sunrise Water, the commission, and CRW. In addition to that, we're gonna be looking for opportunities for part of her accounting staff to also backfill for some of Sunrise's positions that they left vacant. So,
And then
what
share
I
the
s-
labor costs.
yeah, share the labor costs, so what I'm looking at, and this hasn't borne itself out yet because we haven't done it, is the commission is on a biennial cycle, but we're having the same number of people now that will be really supporting 3 organizations. And so if there's a way to better manage our time, especially as it relates, she talked about the hours related to CRW, but those same hours apply to Sunrise as well. And so if there's a way for us to manage it in terms of how we change our methodology, that's something that we really should be looking at. And so that's why I encourage Carol to put together the analysis that she did to present to the board. So strictly from an operational point of view, that's where my interests are in terms of if this is going to save us, because we haven't talked about those savings.
Right,
We've only talked about,
our own internal stuff.
the opportunity cost
Right,
scenario.
and printing
And to
costs.
me, is that if we're not having to hire people, that's real money. You know, it's not some pie in the sky. So, thank you.
If we were to go to it, there's absolutely no reason that if we found that every other month we're doing supplemental budgets, we could say, you know what, this is not working, go back to annual budget. I
Well,
mean, that's a
that-
board decision, so,
That would hold true for
no matter what.
anything that we're doing. I think
Sure.
it's just- But again, that's just the one comment that was shared.
So I only had, as I said before, I only had two concerns. One, what the budget committee that we have standing has to say about that. And second, that as long as you two feel that you can support the other managers in understanding that they have to hold their breath longer, you know, for new money, then that works. But I don't know. There are people that know how to manage money, and there are people that just flat don't. And, you know, as long as we have some checks and balances so that you're sending nastygrams to another manager that says, look, look, this is simple, you know, here's where you are, and
Can't
here,
go past it.
yeah, that's it, you know, and so sometimes you have to be rather tough with people about understanding that, because they get these budgets, they look at all this money and they go, oh, right. No, it didn't change that much, the revenue's the same.
Well, I was with the chair, I've managed down there for 22 years, and I know how that process works. And I can tell you, as the director of purchasing, believe it or not, in a biennial cycle, 60% of the state's purchases are made in the last quarter of the second year. 60%.
Well, that's the way it was at ODOT, I can tell you flat out, because we were ordered.
So you just sort of hang on to your money until you know for sure you're
No,
gonna get
that's
through.
exactly right, because at ODOT, because they didn't know what kind of winters you were going to have, and because you didn't know what kind of infrastructures, failures you were going to have, you were ordered to hold your money, and then the last, actually a little bit more than a quarter, but the last 5 months of that second year, everything went out the door. You bought new equipment, you bought new materials, you hired contractors to get stuff done, you did all of that stuff, and it made it really tough on purchasing, because they had to get, they had to put contracts together, they had to get them out to bid, it was just really, really hard to do. And so, have you thought about those kind of things? So it'll happen here too. People will hold money, and so I'm not sure.
We haven't allowed it on at least the CRW side. I can't speak for Sunrise.
Sure.
I don't know how they're being
Yeah.
work. As you know, we've had favorable ending balances.
Yes.
Ever since we've been here. If the board would like, we may want to hold off on this until we can meet with the committee, get a recommendation or a reaction from them, and we'd be more than willing to bring that back at the next board
Yeah.
meeting.
I like that.
So we could do that. That's not
Okay. Any more questions?
Thanks, Carol.
Thanks, Carol.
Then we'll move on to the engineering report. Carver Bridge.
Well, good evening, Commissioner. Thought it was high time to give an update on the Carver Bridge project. I know you're all very familiar with the project, and I do not want to go and belabor too much a summary of the project itself, but I did want to spend some time opening it up to you for questions. But before we did that, I guess I did want to hit a couple of the dates that I had in my write-up, just to kind of give you a historical context on where we are today with the construction of the 18-inch water line. So the county, as you know, we, in agreement with the county, under our contract, our IGA with them, for us to enable our water line to be built using the county's contract, which they bid the job and awarded it in March of 2011. And, because of some issues with the contractor scheduling, they missed about a year up front because of in-water work window with their Corps of Engineers permit. Missed that opportunity, so that put them back a year, and they had some other issues as well. So as you can see, we didn't really start construction until June of this year on the water line. Going back to the previous July of 2013, the contractor came to the county and they submitted a formal claim on the basis of water line materials that were specified in the project design and specification. Basically, their claim was that They would like to use an alternate waterline material, including the type of fitting that joins the joints of the water lines together. And the issue with that, and as you can see there, the claim was rejected by the county with input from CRW and the county's engineer. The issue with the claim was a couple of things. One was that nowhere in their claim did they submit, or in the bidding or post-bid process did the contractor actually submit for a different type of material to be used, type of piping material to be used, which would have required, because this is a bridge crossing, would have required an alternate design separate from the design that we had, the county had provided for the project. And so that's the claim itself. But
Mr. Chairman, can we ask questions along the way?
Sure.
I just wanted, do you know why he wanted to do a different design? Was it cheaper material or something, or cheaper method or something?
We don't have all the information, to be honest, of why they went down the road they did.
Okay.
I could speculate, we could give guesses.
I mean, if he told you why, didn't tell me why. If he didn't tell you why, you don't know why, and that's okay. I just was curious.
Really, they did not, because we have met with the contractor in the past year, and they did not really offer a reason why they wanted to use, or why they were asking to use a different type of material, other than them claiming that this type of material they're proposing, this type of piping connection, was superior to our design, the one we had designed. But nowhere in their reasoning did they actually supply an alternate design or an alternate reason why they wanted to use this alternate material.
Hence the leaks.
So,
Yeah,
not exactly. So,
Moving along.
moving along.
and by the way, is this a contractor we've used before?
No, we
have
have
not.
Wildly.
Okay.
Rock Creek, is that right?
Yeah, Rock Creek.
Yeah, Rock Creek. 10 years ago?
Yeah. Really? They were the one
There was
on the Rock Creek
yeah,
Bridge?
212, right before the 212
Oh,
224
my.
junction. This contractor did.
No, but I'm just saying, I remember the problems we had with that bridge on the sewer line side.
Oh,
Remember that? Oh, yeah.
The first time or the second time?
Second time.
Second time.
Mm-hmm.
so that's, in a nutshell, is the water line claim portion. The other issue that we're kind of more relevant to today.
Has that been settled, or?
The claim, like I said, has been rejected by the county, and the ball really is in the contractor's court. The contractor is still under contract, of course, to complete the project, and that's kind of where I was going with this next issue. But the claim is, as far as we're concerned, at this point, it's been rejected, and if they want to press it further, they have that right. So all that to say that in August of last year, 2013, the contractor supplied the correct required piping materials to the site and proceeded to install it.
Correct being the ones that were in the
The
original
ones that were
design.
specified in the.
In the original design.
In the design.
Yeah.
Yeah, and we call it original, the design has not been changed.
Okay.
So the design is what it is. And they did not actually start that work of actually assembling the water line until this year, as I said. And that again led to, or was a result of some of their, I'll say, lack of scheduling. The water line is completed. You can see it underneath the bridge, and I have some pictures to show you parts of where it's underneath.
And
the
it sticks
bridge.
out at both ends.
Yeah, seen it.
Yeah, me too.
Yeah.
I got out and looked.
So again, the design that the county did for the bridge incorporated this water line, a specific water line design, a specific design with a specific type of pipe. So where we are today is the contractor finished assembly of the pipe. And then per contract, they're required to test the water line to make sure it holds water. They went through a number of iterations, and just to summarize, the number of locations they had the water line leaking at the joints. Went back, retightened some joints, did a couple things, looking at what the issues could be,
still, when they went back and pumped up to the required pressure, they had leaks. The contractor got to a point recently, I'll say mid-October, where they essentially threw their hands up in the air and said, we don't know what to do. We're unsure of why the pipe continues to leak. The county, and since the county's contractor, we've been, we're the owner, but we're keeping at a distance, but dialoguing with the county frequently on this. Essentially recommended that the contractor contact the materials suppliers and manufacturers to see if there was any material issues with either the piping, the fittings, the type of restraint devices that are holding the piping together. The contractor finally did that in late October. Had some manufacturer representatives on site. One flew in from Texas, the other one came over somewhere back east. And currently where we are today is we're waiting for information from the contractor and the supplier and the manufacturers that shows us what their findings reveal. I realize it's somewhat inconclusive at this point, but that's really where we are. This is a project, again, that was designed a certain way. We felt good about the design, the designer by the county's engineer, their consultant. We went through several years, right, Bob, of design work with them. And you all know the history of this project, that it's stretched quite a bit. And the water line is just one piece of it. So what I did do, if you like, I did throw a couple photos up just to kind of give you a little perspective on the things that I mentioned. This is just a shot of, again, see the date, August of last year. They're delivering pipe to the site. This is before they poured the bridge deck. You can see it's all open there, rebar sticking out. This is a shot looking north of the pipe actually laid in the box out, the block out in the bridge. And you can see here going through these vents where they have casing where the pipeline would then be installed. I'll say some of their procedure, I talked about schedule being an issue, the delays that the contractor, it really, in our opinion, I'd say that parts of the job did not appear that the contractor used a lot of planning. There was a lack of planning, in my opinion. There's certain things that they could have done differently, we thought. We're not there to dictate means and methods to the contractor. It's entirely up to them. And they did what they did. This is a shot now, the deck has been poured, so we're inside where that previous picture I just showed you. So above us is the deck itself. The hangers that suspend the water line are, the bolts are through. And this is looking, well, it's not completely installed. This roller here, there's another one that's going to be placed below with a support plate on it. This is just a picture of one of those assemblies. Going to give you an idea of how the water line is hanging in there.
So it hangs from the deck, essentially?
Yeah. Mm-hmm. This is another shot inside, looking kind of through that casing point. Going through, there's 4 vents, or beams, I guess you can.
So are all the joints megalug?
Yes.
So all the joints?
All the joints are restrained with the megalug, which is, it's a type of restraint system that basically provides additional restraint for the water line. We use megalug, these guys do, on a lot of different projects. Here's a picture they're raising up from below, installing another pipe. Again,
Never seen it done like that.
Yeah, and again, we envisioned
A different
a
method?
bit different.
Yeah, I can imagine you do.
That.
I'm with you. You're kidding.
Here's another shot. Now, it's taking shape here. You can kind of see the supports in place. Another feature of the design is these crossbars up here. There's actually neoprene pads that touch the surface of the column or the bridge beams.
Is that for seismic?
Yeah. The water line was really designed with some rigidity. It's kind of although the bridge itself is is moving. Bridges move.
Plastic.
Yep, they're elastic, and so You design for that flexing, but you also, you don't want your water line snaking all over the place. So that's kind of features of what, this is a, apologize, it's a bit of a blurry picture, but you can see, hey, there's a leak, right? This is not
Hey.
a pigeon sitting up above or something. This is the
Or
real
somebody
deal.
on top, yeah.
You know, this was the first series of leaks that we observed. I think it was our first. pressure
Where is
test.
that on the bridge?
It's just on the north side of the river.
Mhm.
Yeah, just past the, I think it was the second bend, or pier support, if you think of that. Coming right out of the joint, you know, some of them, of the leaks were less obvious, and in the specification, you know, it allows for leakage, but not visible leakage.
No.
You know, and even with the allowable leakage, it's based on calculation of diameter of pipe, length
Temperature.
of pipe,
Yeah, temperature, yeah.
pressure, test pressure, and all that. So this is obviously unacceptable. The other issue that I failed to mention, but it's in the write-up, was rock, which we encountered on the south side of the project. For whatever reason, it was not identified as a subsurface condition during county's design or beyond.
Really?
But we did encounter some pretty.
That whole side of the river's all rock.
Pretty heavy rock, yeah, and this is real serious rock. We did authorize the contractor to bring in for a couple of days some additional equipment just to see if they could get a little bit farther. And they did get past a couple bad humps of rock, but we got to a point where essentially about 180 feet short of where we wanted to be. At the south end of the line, we decided just to stop. Fortunately, you know, the next phase, phase 3, when we get there, the Hatton Road phase, will connect to that point and continue on. And obviously, we'll have some rock clauses in that.
Yeah, some rock clauses.
Yeah. This was.
Quick question on
yeah,
that.
go ahead.
According to what you said here, you had the unforeseen rock condition, which required additional equipment to come in, but you shortened the water line by 180 feet. Is that essentially a financial wash
No, there will be a little bit additional cost there.
on our side?
Yes. Yeah.
How much?
In the neighborhood of $10,000 to $15,000.
That's still in the contingency range in the contract?
I'd have to look at the bid sheet to see. I don't recall if we had a contingency or what amount of contingency we
The
had.
county doesn't set that up that way.
Yeah, because it was a sub-schedule to the overall county bridge bid. I'd have to look at that to verify.
Will that be coming to us as an increase in cost at some point?
Yes.
So wait a second, so we shortened the pipe by 180 feet, but we gave them a credit for rock?
Well, that's the question of the wash, I guess, is if we look at the overall cost.
Right.
The materials, if it's determined that there's not a material issue that they're researching right now because of this other issue, we will purchase those materials. Essentially, they're part of the job. The contractor provides the
180
material.
feet of
Yeah.
pipe and
We'll
whatever.
use them on the next phase.
Right.
Again, if they're deemed no issue with the materials themselves. But the cost to install that 180 feet, you know, offsetting that with the rock cost, I would still foresee some additional cost. They were out there for about 2 days straight of hammering rock and brought in a specialized piece of equipment to do that. So about $200 an hour.
They couldn't blast?
Not there. No. This was the last joint that came apart before, again, the contractor stopped and said, we need to go at this a different way. As you can see, here's the end of one joint, one stick of pipe, here's the end of the other. This was a fairly violent separation of the pipe in the roadway. Fortunately, you know, they're there testing and had things combed off, and there was no other issue of the water line blowing apart. A bit of water on the ground, and your pipe fills with gravel. Again, you know, where we are is waiting for word back from the contractor to determine what the issues are. We have information just from being out there inspecting. We've had our inspector on site. I've been on site. The county has done a very good job, I will say, of inspecting in our stead when we haven't been there. The project manager with the county has done a very good job documenting. He's kept us in the loop very well. And you know, to this point, the county has been supportive of our position. They acknowledge that there's an issue that the contractor is still under contract to fix. Where the issue stands today is that because of the winter weather, the county asked the contractor to button up the job for the winter so that they could get at least an initial layer of pavement down, so that there would not be an issue with gravel or degrading pavement over the winter. In that time, until they can come back in April, May of next year to address this, they'll be looking at a solution, trying to find out what the issue is. So we'll be looking at another delay of 6-7 months. Again, don't know at this point, somewhat inconclusive until we get more information from the contractor and see what their direction will be.
So in the end, who warrants the pipe and for how long?
The contractor is required to warrant their workmanship. I believe it's a year
Yeah,
warranty bond standard. You know, if it's a material issue, you know, that's obviously another issue.
Does the company that makes the material warranty the material?
Yes.
For how long? Do you know? I mean, if you
Don't know that answer. Often it's a year, but it could be, depending on the material, it could be 5 years. I don't have that detail.
In one of your paragraphs, you indicated that they did not install a second of required horizontal bracing. Do we know why that didn't occur?
They forgot it.
So I forgot.
Plain and simple. I didn't get a picture of it, but that's looking south. If you turn your head around, if you could, and look north, this is on the north side of the bridge. There's a flexible coupling just shy of the next bend. Actually, maybe on the other side of that, if I'm looking at it correctly. Anyway, it doesn't matter. These braces that you see here, these horizontal braces I was describing, they were supposed to be on that flexible coupling, kind of like a ball and socket joint, two of them. There were supposed to be these braces installed on both ends of that joint. When it came down to it, they had some issues with the line moving as they were pressurizing it, and one of the issues was that that joint moved, and then they realized, hey, we didn't install the additional brace. Yeah. So obviously,
They just plain screwed up.
it certainly doesn't help the case.
And then, just as your sense of having been observing the project and the contractor and everything, you get a sense of whether or not they're just sort of trying to point fingers at anybody they can and walk away from their responsibilities, or are they acknowledging their responsibilities without having to be pressured into it?
Everything, and this is my opinion, but it's based on meetings we've had with them, the dialogue that we've had, again, via the
I
county.
understand it's just a...
They certainly are not owning up to anything at this point. They're obviously, they're looking to, you know, we all want to complete the job. That's everybody's goal, but these issues that I've brought up, it doesn't really anything that they've told us indicates that they're going out of their way to I'm not going to say accept blame, but you know, we're still in the research phase right now, really. But based on past conversations, I'd say they haven't gone out of their way.
What's the name of the company?
It's Wildish Standard Paving.
Yeah, out of Vancouver,
They're out of Eugene.
Vancouver,
Do
actually.
you know how they spell that name?
Wildish, wild,
Like I said,
Wildish.
wild-ish. Yep.
Yep.
Thank you.
Let me summarize and ask some questions here. So, we got a contractor that wanted to use a different material because that's what they used before, probably. And so they, not according to code, they have not installed the water line properly. And because of some rock, they've come up 180 feet short. That if we extend the line over south, we're gonna have to put that line in sometime.
Mm-hmm.
And also, in order to make sure that they don't just walk away. We've had the manufacturer come out and explain to them how they've misaligned the pipe. By not putting the proper hangers in.
No, you're pretty close. That last part, I just want to clarify where the manufacturers came out, their reps looked at the installation, looked at, they took a couple samples of material, and one of them, the pipe manufacturer, took a sample of the pipe back and tested it. The Megalug, the restraint manufacturer, took back us one or two samples of the actual restraint to research it. Nowhere in that discussion have they yet pointed the finger at the contractor and said, you aligned this improperly or you've done something improperly. Based on our observations, from our inspection, we have seen instances where they either had properly tightened the bolts on the joints, either on the joints themselves or on the restraints. Like I mentioned before, they've appeared to have had some issue with just scheduling and planning out the layout of this installation. They had issues prior to construction. The contract required them to submit a line drawing, a drafted drawing of the layout, because the design, the plans were 2 sheets that showed the entire assembly, but they were required by contract to show a detailed line drawing with each joint of pipe, stationing where each joint occurs, each stick of pipe.
And
that took them a number of iterations, I think 10
And
times
tries.
they resubmitted on that. Yeah.
Wow.
So, right now, we're really just looking at all those facts. Our confidence in the contractor's work is not real high at this point. So, but again, I don't want to speculate. Obviously, we need to see what the manufacturers come back with and see what the contractor puts forward as a solution, because really, they own the pipe right now. We have not accepted the pipe. It's part of the overall bridge project that has not been accepted yet by the county. So the onus is really on the contractor at this point to approve the pipe, get it to pass testing.
Is there water in the pipe right now?
If there is, it's residual.
Yeah.
Yeah, I mean, that last,
So the drain,
yeah, I mean, there's.
so there's no freeze problem?
No.
So I have one question. I'm not sure who I should direct this to, whether it would be to you or to the general manager, so I'll ask it generically. It does not sound to me like they have been particularly diligent in doing the job, for starters. The problems still exist. They don't seem to be assertively stepping up and taking responsibility. So what options do we have? Since they own the pipe and they own the project and nobody has certified and accepted the project, where does it go from here and what options do we have, if any?
Legally, what we're doing is we're playing out the legal solution to this. And the legal solution to this is that when there's a workmanship problem or a performance problem, you have to give them an opportunity to mitigate. Mm-hmm. And that's what we're doing. The real danger here, and a lot of people get themselves sideways pretty quick, is when you go in and try to solve the problem between the contractor and their supplier, and the supplier it's in their best interest to determine whether or not the pipe was installed properly or if there was a performance issue with the pipe. But that's something that the two of them need to work out. And if we jumped in prematurely at this point, we'd be in deep trouble, in my opinion. And so the process is working its way out. The county, who has been working on our behalf, we're satisfied with what they're doing. And so we need to let let it play itself out.
And
So there's
And
really no decision of any kind for us to make at this point.
because it's not even our contract,
Yeah,
Yeah.
I understand. It's just-
not even ours.
Yeah.
Yeah.
What is the completion date of the bridge?
It was this November, the end of this month.
Pardon?
The end of this month was the original, was the original completion date.
So
Didn't
by
make it.
next month, there'll be traffic going back and forth across the bridge?
Well, there's traffic going across it
It's
now.
going
The
across
bridge
now.
is open now.
So is there a penalty on this project for?
I do believe they have liquidated damages clause in the contract.
Yeah, they
I know the
exercise
county
it.
is hesitant
Yeah.
to enforce that.
Right.
Especially
And
as-
all of those things factor into their
Yeah.
decision to stay or go.
Well, as most of these projects, they get paid periodically. If they complete part of the project,
Mhm.
has the county still retained
Yes.
enough money
Yeah, they have paid them for the installation, but not the testing portion. We have been going and accepted the line, and they have the retaining on the job, which is a substantial sum. I think the overall, well, the total job itself is over $8 million, so that's a decent retainage percentage of that.
So I guess I have one last question from our engineering staff in general. Do you have any concerns on whether or not down the road that whether it's this primary contractor or some other subcontractor that comes in and makes it whole in the end of being successful in making what has been done, what they've been paid for so far work, or whether it's gonna have to be taken out and reinstalled? I guess my concern, and I have been on a number of these projects, once you have a failure of the pipe, like we saw at the failure of the end of that pipe, you gotta reevaluate the entire end. I mean, that whole thing, end to end, has gotta be reevaluated to make sure that, like you say, your one-line drawing, everything lines up again. Because if you don't, then we're in trouble.
Yeah, I agree with you. That's a concern that we have too.
Is it?
Is
Okay,
that,
yeah.
a number of issues, whether it's with the gaskets, the rubber gaskets.
Oh,
in
yeah,
the
all of
joints,
those,
the bolts themselves. I mean, the thing has gotten repressurized so many times, and they, messed with it, I'll say, a number of times to try to rectify the problem, that you could be compromising certain aspects of the pipeline. That to disassemble it and fully reassemble it may be a necessity. We don't know at this
yeah,
point.
right. I mean, my experience has been that you want 2 cycles of the pipe. If you're good, you get 2 cycles of the pipe, one to pressure test, one to chlorinate and use, and it's done,
Yeah,
and you're out of there.
that's what we like to see too.
I mean, that's a standard I've always seen in the industry, and so to be anything less than that, I'd be going, oh my, what have we got here, so.
Yeah, and even on bridge crossings, there's nothing magical about a bridge crossing. They're done different ways.
Absolutely.
You'll see
Different kinds of
piping
materials.
installed on the side, hanging off the edge. You'll see it underneath.
But this is a pretty common system here.
Yeah.
The only other concern that, and we've talked about it, is the ability to mitigate it now that the bridge is completed, could up the cost of mitigation,
Yeah.
because, essentially you've got a finished bridge,
Well, you've lost all your false work.
Yeah, and you've got to go and
Yeah.
do whatever it is you're gonna do.
I mean, if you have to go back and reinstall the false work
Rebuild your-
and do all that stuff and do your in-water, and, I mean, you could add another 1.5 years to this project. And I guess my concern is I've seen 2 failures of the South Fork line going across the 205 bridge. Both of them have been very impressive to me. See the amount of damage that's done by that pipe coming apart, and both failures were right where it needs to land, where it goes from the bridge to dirt. And when those came apart, holy moly, it was impressive.
Well, I think that the contractor here, without getting too far into speculation, I think really believed that they could change order a solution to this problem. And we've held the line on it.
there, you know, and there's, to be fair to the situation, there's, if the contractor would have come early on, you know, either before the bid or, after the award, you know, they had that option to
But
come
prior
and-
to construction.
come and say, hey, we wanna use a different style of pipe, and we have this alternate design that supports that. Can you consider that? They never did that.
Staff and the bid methodology that we used here gave them an opportunity to do that, and they refused to do it.
Oh, okay, so they've had an opportunity.
They've had an opportunity to do that. And I guess they did submit it, as I recall, and we rejected it. Is that right, or am I getting ahead of myself?
Yeah.
I mean,
No, they did not submit, what would have been required to actually submit it as an alternate.
yeah.
They did not do that.
But didn't they talk about it or something?
Yeah, they've talked about
They talked about it, but never did submit it.
I'm a little confused because it says here, they didn't start construction on the water line until 2014.
it. Right.
In 2013, in July, he submitted a formal claim to the county disputing the design and wanted,
Yeah, that was during the submittal phase, so pre-construction. They were required to submit on all the materials they intend to use, and we review those and make sure they comply with design. During that process, it became apparent that the contractor wanted to use a different style of pipe, and we rejected those submittals. The first one or two weren't even real official submittals. They were more of an inquiry, saying, hey, can we consider this? Or can you guys consider this? Because it didn't meet the design criteria, and again, this specific pipe style was designed to fit this specific scenario. The contractor never really came back with a concrete submittal and an accompanying design that would support that alternate style of pipe to be used. So that's why I had that date range in there, that the submittal period took place between February and June of 2013, when they were submitting pipe materials, fitting the works. And then it was in July of 2013 that they submitted a formal claim, because they saw an issue, or they were claiming that there was an issue with us not accepting their submittal.
You need an estimated time when the manufacturer and the contractor are gonna come back with some result.
We're hoping to hear soon. We know the county's been in contact with the contractor, and there's been some initial correspondence from the manufacturers, but we're waiting for, you know, all that to get put together and a written
So you
response
think
from the
we'll get
contractor.
that by the end of the year?
I think so, yes. Yeah, I think probably the next couple of weeks, if not sooner.
I realize you don't have a crystal ball. Do you think that we can have resolution to the problem prior to construction season like April, May next year?
I think so.
Do you feel comfortable that?
Yeah, I do. I mean, if it's, you know, again, we don't know what the issue is. If
Right.
it's a material issue, that may be something quicker to identify. If it's something else, a workmanship or, you know, a design issue, again, you know, we reviewed the design. We felt very comfortable with it, with the county's consultant's design to fit this installation. But that'll be part of it too, is verifying that.
Has there been paving for traffic
Yeah.
over some of our lines?
Yes. Yeah, what they did is they paved, I think the total paving thickness was 6 to 8 inches thick on that road. They put down a 2-inch lift, just so that there would be a wear surface over the
Or
winter.
just temporary?
Yeah, it's
It's
temporary and
just the
substandard.
first lift.
Yeah, there may be areas where they have to cut back into that next year.
Yeah,
to
they
work
want
on
to
this.
fix.
Yep. Any more questions? Well, I appreciate your time. Thank you.
Thank you.
You get all the fun ones, Adam. We appreciate your help. Thanks.
Mr. Moore?
Yes. The first item is the Clackamas River Water Supply Commission meeting on 10/13. And the meeting was held, and several of our commissioners, being the chair and Commissioner Herbertson, were in attendance. You know, we talked about the two items that were discussed. One was a report from the general managers about our progress to date on working with staff about looking at opportunities for shared resources. And the other one was a discussion about the insurance risk pool that the board voted on tonight. So I don't think I don't need to get into much detail there. And then I'd like to affirm that there was a formal announcement by their board or board and staff that their finance director, Lynn Riguto, was retiring as of January 2nd, 2015. So in 6 weeks, she'll be resigning her position. And Ms. Bright, that you know very well, has agreed to be the CFO for both organizations. I'll step over to number 2, and no disrespect to Commissioner Herbertson, but we did meet and talk, and as we do with commissioners from time to time who have questions about issues. The third item is the HP Trim document software. What that is that we have a system called DocuWare, but we've been advised by the Secretary of State that they have a system that is cheaper to operate than our DocuWare system. And our staff and Sunrise staff has met with the representatives from the Secretary of State's office. They gave a presentation, and we're now in the process of evaluating those proposals to see whether or not they will do the job that we need to have done here at CRW and at Sunrise. What we're trying to do is, wherever possible, that we can utilize the system that Sunrise is using, so that, first of all, we get better results by both working on a uniform platform rather than separate ones. And that's what we're checking on. And the other advantage, if there is one, from what we heard, is that this is a system that would be managed by the Secretary of State's office, that's also responsible for setting the standards for document retention. So we'll be looking at that further.
Question on that?
Yes.
Is one of the Secretary of State's office in operation now?
I'm sorry, I misunderstood.
Do they use that system now?
Yes, who's using it is the Secretary of State and varieties of cities around the area. And one of the things that we've asked our IT manager to do is to talk directly to the users, not the Secretary of State, to see whether or not they are satisfied with the performance of the system. And the feedback that we've gotten thus far is that they are. I wanted to go beyond the Secretary of State to see if it's real a Memorex. And so we're checking on it.
That's something I haven't heard from.
I heard that. That's what I was thinking too.
Yeah, that's a way back.
The meeting regarding, we met with Sunrise Water regarding material and supply procurements, and we're continuing to work those issues. We met with them as recent as today. We'll keep the board posted on that. We've also continued our meetings with the CRW in the city of Milwaukee, and we're making a lot of progress on that. I think probably within January or so, we'll have probably a more complete report on what the outcome is there. So that's really moving well. They're wanting to get her done, and so do we. And so we'll advise you of the outcome. We've met with our labor attorney, and we're talking about some of the issues that you may have heard tonight from our staff, and trying to get that process moving. I guess there was a date set for mediation that has been rescheduled for January. is what I've heard. It was supposed to have been scheduled for this month, but I think we don't know the particulars of why it got moved, and so we'll find out. And keep the board apprised of that. And
You
we may
don't
need
know.
an executive session to talk to the board about that.
You don't know who.
Who asked to have
was
it
get
canceled?
moved?
The, I can apologize, the mediator could not meet on the 24th.
The mediator,
The mediator
Pardon?
the
themselves.
mediator.
Could not make that date.
We pushed that up 2 months.
Yeah,
That's what I've been told.
Really?
Mm-hmm.
yeah. So we were as surprised as anybody else, and so. The administrative team had met with the general managers and gave us an update on the progress that they're making on looking at separating functions and sharing functions between the two groups, and that's pretty much, I think, completed now, that their report was accepted by the two general managers. And so we're good to go there, and we will be reporting at the next commission meeting as the outcome of that. Because you guys have asked us to keep track of those discussions as well as cost savings that could be realized. We attended, we being, I think, two commissioners, Commissioner Kalani and Commissioner Hermanson, attended the North Clackamas luncheon at Harmony Center. There was a presentation by Clackamas County Commissioner Paul Savas, and he provided us with an overview of the county's strategic plan and planning process. He highlighted some issues that he felt was unique to Clackamas County as it relates to pockets of poverty in the county and the lack of supportable infrastructure for industrial development, I think, was the issue that he was really looking at, that as it relates to family wage jobs. And the county has also, as a result of doing their strategic planning, they have now given their departments 3 years to come up with plans for how they will implement the county's strategic plan. There was some discussion by the attendees there as why would it take 3 years for the departments to essentially draft plans on how they're going to do what their bosses told them.
It seemed like it should be shorter than 3 years.
But won't their strategic plan be out of date before they get to? I'm
Yes.
serious. I mean, that's
Yeah.
work,
Yeah.
because they adopted the strategic plan, what, 3 years ago?
Well, I believe that they think that the board,
I mean, what am I missing here?
from the plan that was adopted 3 years ago, the board has essentially updated that plan.
Okay,
And I think they recently completed that.
But there should be a presentation on the general economic development plan to the board, that I think it's this month.
This month. And so it would be 3 years, and that was one of the things that the group talked about, and it didn't get resolved there, but that was just more of a statement of concern, you know.
The short version is that the EDC's basically looked at the various communities in Clackamas County and looked at where we have existing sites that
Mhm.
we could try to attract businesses to and what the infrastructure needs are there. Both inside and outside the urban growth boundary. So inside city limits, looking at certain places, and then obviously the county's gonna have to cooperate with those cities as far as those particular sites are concerned. They prioritized the first priority, if I remember correctly, is the Happy Valley area, because there's a significant pieces of property there that could be used for instance, a medical complex. That's one possibility.
but not industrial.
Not necessarily industrial there.
Right.
There's smaller parcels in Milwaukee that could be used that way. There's some very small parcels in Oregon City. Damascus was basically prioritized last because of a combination of their political dysfunction at this particular point in time. They're unable to develop a plan of their own even. Plus, they are really dealing with the urban-rural divide concept, I guess mentally speaking, in their community.
Did their comp plan pass?
No.
No, it did not pass. So
Oh, my goodness.
that remains,
Yeah.
as they say, in flux.
Well, not so much. Did it get
It was,
decided?
So-
it was resoundingly.
Defeat
Yeah.
again. Oh, my God.
So there's properties have been identified, some infrastructure needs have been identified. One of the biggest ones is transportation. And of
So
course,
is this the meeting that identified adding more lanes to Interstate 205?
No.
No,
Okay.
this was the luncheon that I had.
Yeah, right, but I was just
No,
wondering
this-
whether they
this-
had talked about that,
No.
because that revelation came out right after the meeting, and I didn't know whether or not that.
We have not addressed that at the Economic Development Commission at all. That has not been, the transportation problems tend to be off the freeway, getting
Yeah,
to.
connections.
Yeah, connections, the
Right.
connectors, that's
The
the
connections.
better term, the connectors. You know, some of it goes through residential neighborhoods to get to the actual sites that you might want to do something, and that creates its own problem. So those are the issues that have been looked at. The plan will be presented to, the recommendations will be presented to the county in, I believe it's this month. It could be December, but I think it's this month. And then, as they say, the ball's in their court to go from there.
So did the county, I guess the only question I've had is, did they look at the proposed 224 corridor as providing some of this industrial land? Because there's really no other place there could be a freeway built in this county in lots of people's lifetimes. So the only thing that's even on the table that I know of is that corridor between 26 and 205. And so, because that's still, even though the environmental impact statement's been done, it could be modified if there were.
I'm not sure, to answer your question, since that's outside city limits, and I was working, the commission was divided in half, for inside city limits and outside city limits. So I was working on an inside city limits section.
Urban and rural,
Yeah, so I am not up to speed on what they cover as far as 224 is concerned. I may have it in documents at
Yeah.
home, but I couldn't answer that question right now.
See, because the county paid Group McKenzie to do an industrial land inventory here 2 years ago. And you can get the map, but I don't know whatever happened to that. You know, did they use any of that information that they paid for that?
If that half of the committee used it, I don't know.
Okay. Because it covered the whole county, you know, it was, and there wasn't a lot of industrial land available.
I do know what we were presented from staff may have come, could have come from that in terms of the sites that we looked at in our half of the committee, because they had good professional drawings of these different locations.
Right.
So, but I couldn't tell you the source for sure. Sorry to have interrupted, Mr. Chairman. Mr. Moore?
Your meeting. The emergency manager's report, I think that I can summarize the highlight, because I think people are getting tired, is that the emergency manager is meeting both with in-house staff and with Sunrise, working on the planks of the plan that need to be addressed and put together for the larger plan. And there's been 4 or 5 meetings during the month where he has done that, and they're still moving forward on that. So we're making progress. And so, pleased to say that. So, Mr. Chairman, that's the end of my report.
Thank you. We'll finish up with any additional public comment. Anybody more? Now we're going to commission business. Confirm the dates for work session coming up.
Well, I believe we did that last month.
Yeah.
And I didn't bring my calendar with me today, but I know we have a work session scheduled for this Monday. And we had one scheduled for third Monday of December, but there was some consideration as to whether or not we were gonna cancel that one for the holidays. So,
And we talked about canceling that one if that's the pleasure of the board, because of the holiday season. And so,
Staff wants to cancel that one?
it's up to you. Sure.
I guess my take is, I'd like to hold off on deciding on that until after our work session on Monday. We may need it.
Okay.
January? Everybody's okay on
We
January?
should be fine, I think it's third Mondays.
I guess it's scheduled on the same day as a holiday,
Right.
Or
so
in January?
And that's problematic, how?
nobody will be here.
Well, that's good enough.
That's how,
Well,
that's how.
Not nobody.
Yeah.
So we'll,
Me, myself, and I.
Here you go.
I'll bring the calendar Monday and we'll take a look at it.
There.
Anything else?
I'd like to
Chairman.
compliment Carol and her staff for the audit. That was a great report. It's sure nice to see those kinds of audit reports. So, thank you for a job well done.
And the only other issue, Mr. Chairman, is we may be having an emergency executive session either before or after Monday's meeting. And what I'd like to do is poll the board once I get more information. So I just wanted to put that on your radar screen.
Okay. Anything else? If not, we're adjourned.
All right.